Hey guys, this is a market update. I'll go over the strategic reserve news and a lot of macro data in this video because things are changing right now, right? The macro data is changing massively and fiscal policy is changing around that as well. And that's really important for the next 6 months. What's happening right now is a lot of uncertainty around this data and government policy. And so markets, just chopped sideways, right? Bitcoin has done it, crypto has done it, stock market is doing it as well. A lot of uncertainty leads to this kind of market. It's opportunities if you're dollar cost averaging. If you look 6 months ahead, I think a lot of this could change and we could be in a very different scenario, which is typically when Bitcoin tops out at the end of its bull cycle, the next 4-year cycle. So time to pay attention. But yeah, this is how we all feel today, right? The strategic reserve is official. But traders are going to sell the news, right? So they bought the rumor, sold the news, that's fine. If we finish this week anywhere near flat around this level, I think it's a win, right? This previous kind of support level here, this choppy trade, if we finish anywhere near that, I think it's pretty decent. We had a big sell-off and we've come, these hammers in here, right? 1, 2, if we print another hammer more or less this week, I think it's pretty good to show that there are buyers in the market at these levels as well. But to be fair, still kind of choppy, weak, sideways action. The RSI is, pretty weak as well, right? So really, if you're looking 6 months ahead or more, if you're an investor as well, you got to be consistent when Bitcoin is kind of anywhere down from an all-time high, right? When it's shopping around, when it's fairly weak, that's where you want to get in because that's where returns remain. We're in a bull market. It's not cheap Bitcoin, but look, I think we can go a lot higher here. I think we just have to calm down after this strategic reserve narrative, right? It's over now. It's done. We know it, and then we can figure out what the next narrative is, which I think is essentially huge fiscal spending from governments. If you trade crypto, $30,000 deposit bonus from Bybit down in the description. Click the link and go through. You can get that. Or you can get a deposit bonus and 10% fee discount on Apex, which is Bybit's DEX. You can just trade directly from your wallet. Link below as well. The strategic reserve is massive if you look at it within the context of what Bitcoin and crypto have been since inception, which is basically derided as a joke. And now we have the US government, which, let's be fair, is the most important for setting policy around the world, saying Bitcoin is now so important that we need to take a position and we need to take a positive position. Being negative against it is going to be detrimental to our nation. I think that's what it's saying, right? And it's not that the government is telling us we want Bitcoin to do well. It's that Bitcoin has done so well. Its characteristics are so strong. So many people desire it that the government now has to take a position on it. And I think that's generally very positive news that the US is taking a strong position in a positive light. And that's just great news. But traders are going to hate this because there's no buying of any more Bitcoin. That has to go through Congress. That's going to take a very long time. And so traders are going to dislike the news because it's kind of the end of the narrative at this point, right? We priced all of this in when Trump won and through the ETFs. If you can buy a BlackRock ETF in a brokerage account, it's pretty much available to everyone at that point, right? The strategic reserve will only contain Bitcoin. There will also be a digital asset stockpile containing other assets, but they're not going to be buying these. And so I don't know how they're going to stockpile these. Maybe bankruptcy estates or other methods of actually attaining the assets. I guess so. But they're saying Bitcoin and crypto is different. So that's important as well because Bitcoin is digital capital. So we're looking at a potential market cap, like a valuation in the region of gold. And maybe these other ones are looking at market caps or valuations in the region of banks or payment processors or technology companies, something like that. But they have to make money if they want to have that valuation, which again, different than Bitcoin. Bitcoin doesn't make money. Maybe these have to make transaction fees or have some sort of other demand characteristic. You can use these as collateral as well in their DeFi systems, but the government is saying Bitcoin is different than crypto. And I think that's important for policy around the world. We can agree with it or not, but the policy is going to come out like this, right? You have Bitcoin, digital gold, you have stable coins, which the US wants to be really strong in now, and that's going to come through Congress as well. Proliferate dollars around the world. That's what they want, right? Because they have power and they're going to use that to proliferate dollars, and that helps them out. So, that's their power. Bitcoin and digital dollars that run on these blockchains, and that's really how the industry is going to shape up. And it's important to know that because you have to play the game for what it's going to be, not what you hope it will be. Let's come to the macro data though, because there's a lot of change happening right now, both in fiscal policy and in the macro data. And so it's very volatile right now. It's choppy. You get bits of data coming out, market pumps and dumps, and right, very volatile, very hard to trade. But also, if you do get any weakness, I think you have to just go into assets that you think are really great because during weakness or anything, that's when you need to go into them. So what does the US want to do? The US wants to cut interest rates down, and specifically the 10-year interest rate. The only way they can do that is by making the economy a bit softer. They own 25% of GDP through government spending. and they employ a lot of people. So they can make people unemployed and they can cut their spending, which is what they're trying to do. Whether they're going to make a dent in it, it's so large. Whether they can actually figure this out, I don't know, but they're trying at least. And I think they can make a dent in inflation and employment figures for sure. You can see some of the data coming out already. So they seem to want to do this and they're focused on it. Interest rates coming down. Now, they're trying to force the Fed's hand as well. The Fed's at 4%, whereas trueflation, the CPI index, is 1.38%. And so if inflation is coming off this much, now the Fed doesn't look at CPI, it looks at PCE. But in any case, if inflation is coming way down and unemployment starts to tick higher, that is going to force the Fed to cut interest rates. And, that's pretty good news, I guess. Does anyone want, very high interest rates on their mortgages and credit cards? No. So this is what they're trying to do. And they have to create economic softness and weakness to do that. We don't know how this is going to come out. Is it going to overrun? Is the market going to become too soft and the Fed's still not going to change? Are they going to be too late? All of these questions create the volatility. So I just think if you have a 6-month view, you can step back and say inflation is coming down, unemployment maybe is ticking up a little bit, and in time, the Fed will come way softer, and they can do because they're at 4% and they can come down to 2% or below that even. So they've got a lot of way to come, and they can do that. So I think if you take a 6-month view and just say the economy will be soft, but through Congress, they will probably enact tax cuts, other incentives, deregulation. That's all great news. It's good news over the medium term. But we have to go through this volatility because they do need the interest rate down. And you can see the dollar index is starting to come down as well, which is actually pretty bullish, kind of risk assets. We need the US dollar index to come down. We need the US to come a bit softer. And then the Fed can come softer, and all the other central banks, they want to stimulate and they can be softer as well. So I think that 6-month view is pretty good, but inflation doesn't seem to be getting hot. If you look at challenger job cuts as well, potentially a leading indicator for initial jobless claims. So yeah, that would be a recession, right? If you look at these spikes before, these are recessions. So we could be called a recession here. It doesn't matter too much, right? It doesn't actually matter if they call it recession officially or not. This is important data. So you can see that here. Right, United States labor turnover, layoffs, potentially spiking here. So it's important to look at that. We could be in this right now. We could actually be going through it. This soft period that we've had in markets, this could be it. But they're going to keep going with this. And through Congress, they're going to have to enact ways to encourage employment, deregulation, tax cuts as well, if we are getting this drop down. Now, remember, I think that GDP and inflation should naturally be negative because the free market creates wealth. But the government is there, 25% of GDP, making sure it isn't. And the central bank, through its monetary policy, makes sure that GDP and inflation are positive. So we know the end game. We know that GDP and inflation always have to be positive. But in the meantime, you have to make it weak so that they can stimulate again. I'm trading for that stimulus, which may come over the rest of this year, leading to the next kind of bull market move for Bitcoin, which is typically when Bitcoin tops out, would be 2025. So that's what I'm trading for. And this weakness, scary for sure and volatile for sure, but ultimately it leads to a much softer Fed, much softer dollar, which is typically very good for a bull market run. It may actually become clear later on down the line that we are in a slowdown right now, which, look, slowdowns aren't great, but we know 100% that the reaction to a slowdown is debt creation and or money printing, and that pushes asset prices higher. That's just a fact. And you can rely on it because they can't let the financial system collapse. And so around the world, they're already going in with the debt bazookas, right? This is China here, 1.3 trillion yuan in ultra-long special sovereign bonds, new special local government bonds, special sovereign bonds, right? They are printing debt, creating stimulus into the market to make sure that the price level doesn't fall, stimulus in asset prices. Germany just have broken their fiscal rules, spending hundreds of billions of dollars more on the war machine, right? That's fiscal stimulus, pushing asset prices higher. Imagine if the US announced a 5 trillion fiscal injection and told you they'll do as much as it takes. That's what Germany just announced in percentage of GDP terms. So the fiscal bazookas are coming out. There is a debt war happening. There is just unlimited debt creation. Interest rates are going through the roof. Now, if no one is there to buy them, which there isn't, by the way, even US debt, the 10-year, there's not enough buyers on the 10-year. That's why they're issuing bills, 1-year bills, because that's where the liquidity is. They can't issue enough 10-year debt. If the US can't do it, none of these guys can do it, which is why yields are going through the roof. There are no buyers for this garbage anymore. Who's the buyer? The central bank. That means that we will suffer from price inflation again and again and again. And so asset prices go higher. So this is why I'm in Bitcoin. It's very clear. All of these governments are bankrupt. And the only thing that they can do is just create more and more and more debt and print more and more money. It's absolutely ridiculous. And the only way out is to buy assets. Bitcoin is the asset of our generation. The US have just brought it in a strategic reserve. Bitcoin is the answer to all of this garbage. How can you own bonds when these guys are just printing even more and more and more and more? And there's no buyers for it. The only buyer will be the central bank. Currency gets hit again. Inflation, asset prices go higher. So that's the trade of our generation. Jamie Coots also has a really good macro dashboard which gives you certain factors and if they're changing in a bullish or a bearish way. Most of them have flipped bullish at this point. Over the last few months have been fairly bearish. So again, good news. US dollar index is coming down, it's getting weaker. And that's because very clearly in the data, and it's not in the mainstream media right now, but you can see it in the data and you can see markets pricing this in, is that the US economy, I wouldn't say economy because that's not the free market. The US government policy is weakening GDP and inflation and raising unemployment because that's what they control and they can do that. So those macro data points are becoming softer, which ultimately is bullish because the central bank steps in and lowers interest rates. Lower interest rates, bullish risk assets, unless we get these huge financial crashes, which you can't trade for anyway. You just have to make sure you don't get stopped out on any crazy leverage trades. But US dollar index coming down, central bank balance sheets expanding, global money supply expanding. That is the story. If you don't want to trade, that's the story, and that will happen, right? Central bank balance sheets and global money supply have to expand over time because they just expand themselves or collapse. And buy Bitcoin because you don't want to be in this garbage. But yeah, things are looking positive. Again, a little inflection point here after a lot of weakness. But if we look at the stock market as well, stock market index, look, near all-time highs, but if you actually break this down, the equal weighted index, it doesn't look strong, right? Have we been in a slowdown actually? Are we in a slowdown right now? And the fiscal bazookas are coming out already, so maybe. Russell 2000, it's not looking good. If you look at the Mag 7, we've just had this huge chop and trade around here. So, things have not been that strong actually. The economy, or I should say not the economy, government policy has been weaker. And as long as that comes out in the data, the central banks are still not weak in the States. They could come way lower. And I think that's positive. If they just drop interest rates, come a bit lower, the US can start terming out some of its debt. That's ultimately positive. But look, risk assets go higher because it's the only way. They're valued in the fiat currency, which has to debase itself through all this fiscal bazooka stuff and the central banks having to buy the debt because there's no other buyers of it. If you don't have a Bybit account yet, link below, you can get a deposit bonus. Anything you deposit, they'll give you a bonus up to 30K. And if you can't trade on Bybit's DEX, you just trade straight from your crypto wallet here. It's Apex. Deposit bonus and 10% permanent fee discount by the link below as well. I'm James, this is MoneyZG. Cheers for watching, and I'll see you in the next one.